They raised defense by $50 billion a year. It's up to $700 billion. He wants money for walls. He wants border control. He wants law enforcement. He wants more for veterans. The point is they're spending.
Those are his priorities, but Democrats have their own priorities. So
I know, but
both sides pull this stuff, right?
Sure.
So how do you? Because I always think, like, when you can explain things about money coming in, all the extra money going out, I think Americans are very smart. If they heard, all right, this is not sustainable, but done in a way that doesn't patronize them, but informs them, shows them the direction where things are going, and that it's very unlikely that's sustainable. You'll have some belly aching, obviously, but you'll have a lot of other people say, he's right, or they're right, that this can't be sustained. So what's going to happen?
Well, I think we're going to reach a very rough spot in the road when the Fed begins to contract its balance sheet. Remember, it's been expanding for 30 years.
We finally, explain, they owned a lot of Treasury notes and bonds.
Finally, they said enough is enough. So when you take that $4.5 trillion and you start to let it shrink, it's the same thing as selling. So instead of the Fed buying bonds and making it easier to fund the debt, they're going to be selling, compounding the funding problem.
And at a discount, no less, and interest rates go up a lot. Are they going to rates go up a lot?
And the deficit is going up. It's going to be over $700 billion.
But rates go up a lot because even a slight uptick in the rates will lead the debt to get exponentially larger.
Of course. The rates will go up. If they go up 100 basis points, 1%, not much. Okay, that's $200 billion a year of additional interest. Where are you going? Where are you going to get that?
Do you know what? Do people ever say, David, in the end, well, we somehow managed to thrive with this debt getting bigger, 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 bigger. Someone is always buying it.
Yeah, the answer is we should have had the day of reckoning in 1987. We didn't because Greenspan got there. The central banks in the world all start buying debt hand over fist.
Were you saying 87 after the stock market crash?
After the crash. And so, therefore, they have a balance sheet today of $20 trillion when it was less than $1 trillion then. If they hadn't bought $20 trillion of government debt, English, German, American, Canadian, and the rest, the interest rates in the world would be far higher than they are today. Private investment would have been crowded out. We would have had a crisis long ago, and we would have been forced to honestly face our fiscal choices. But essentially, for the last 30 years, it's been free lunch politics.
I know you can't grow your way out of this whole thing, but can you grow your way out of some of it? In other words, if you get from 2 to 3% growth, I've heard figures saying that's an extra $2.5 trillion in revenue to the government over 10 years. Do you buy that? In other words, it doesn't solve the problem, but growth goes a long way to address the problem.
It certainly does, but the mistake is they've built in more growth to the baseline than we're ever going to get. So if you start with a realistic view of your deficit and debt, it's not $10 trillion over a decade, it's 15. And that's what you have to start with. If you get a little extra growth, that may come down a few trillion. You're still deep in the soup. You're still bankrupting the country. You got a baby boom retiring and getting old and ending up in hospitals and nursing homes and all the rest. This is a frightful demographic fiscal time bomb that they are utterly ignoring down there. And it's reaching a point now where the one agency that kept it all pasted together, the Fed, is announcing today we're done buying bonds. We're going to start shrinking our balance.
They've been saying this for a while. They might spell it out in the detail.
I don't. Neil, you got to take this seriously.
I do, but they talked about this day of reckoning. Maybe you're right. They spell it out today,
it's going to start. It's going to start this fall.
But
it has to.
All right. So we know that day has come. We know they have to start unwinding these positions. I guess a lot depends on the speed, who does the buying, and how much at a discount they're doing the buying, because that lifts the yield. What do you envision? Play that out.
Well, I think if they get to where they say they will be early 2019 after the next election, they'll be shrinking their balance sheet at a $600 billion annual rate. That's the same thing as selling. The Federal Reserve selling $600 billion of bonds in 2019. On top of that, the government will be borrowing $1 trillion. That's how big the deficit will be in 2019 at minimum. That will cause interest rates to go up several hundred basis points. It will undermine undermine the whole fanciful dream on which this whole economy is based on, which is cheap interest rates, junk bonds to finance every kind of leverage buyout.
You see a bubble in the bond market,
oh
which
my
will
gosh.
lead to a bubble in the stock market,
Yeah.
right? So that's your crash.
Well, no, what you see today is Toys R Us crashed overnight, $5 billion of debt that's been sitting there, barely keeping alive for 10 years. That is the
well, that isn't the debt. That's their inability to survive in an environment where
they never should.
Out-hustled by Amazon.
No, that isn't it. They never should have put $5 billion of debt way back in 2006 on a company that was then faced with Walmart. Amazon existed.
I see what you're saying.
It was coming.
But it's not the debt that did them in as much as not appreciating the environment they're in.
No, they should never have been able to borrow at the low interest rates they did, or any
they're a
interest.
prominent example of someone who borrowed
It's the whole economy.
A lot are in a similar position. Right?
Yeah, what I'm saying is the whole economy is Toys R Us. Everybody has been borrowing far more at cheaper interest rates than.
But I thought average Americans were improving their balance sheet. Average companies were improving their balance sheet.
That's Wall Street mythology.
Really?
We still have
You really are a Debbie Downer.
No. But I try to be realistic. There's $64 trillion of debt, public and private, on the economy today. Federal Reserve says it. It's not me. Now, what did we have at the time of the crisis in 2008? $53 trillion. So we got 11 trillion.
You know, by then, there's a lot of corporations who cleaned up their balance sheets. They've cleaned them up enough, or that individuals, paid down their debt maybe because they were forced to, but.
Well, some did, but on the other hand, we have had massive borrowing in the corporate sector to buy back stock or to do M&A deals.
So what's going to happen if they get much lower tax rates? The president wants that for them. What are they going to do with that?
They will probably try to pay dividends in order to keep their stock price up. It's not going to lead to any jobs.
So they're just going to prop up something that won't help the economy.
Yeah, it's not. They're not going. It will not lead to any new jobs.
Donald Trump a one-termer?
Yeah, if he makes it.
Really?
Yeah.
So we just interplay the roles. The Democrat comes in, same disaster. Republican comes in, so that's the same drill.
There's no consensus in this country for doing what needs to be done. There's a lone voice. Rand Paul is out there saying, "People, wake up."
Rand Paul is your guy. The president was kind of indirectly criticizing
so who
him
goes after the one guy who's speaking truth to power fiscally today? The president goes after Rand Paul. Trump is a big spender like there's no tomorrow. He has no idea of the debt disaster that's lurking down the road. He didn't create it. He inherited it, and his job is to deal with it if he wants to stay in the Oval Office.
But you can't grow out of it. You can't grow to make things better.
Well, you're going to be lucky to grow as much in the next 10 years as we did in the last 10 years. If we do that, we're already 30% higher growth than what CBO has in the forecast.
Anything good going on? Anything helpful? See any good movies?
There's a great
clowns that are shorting stock. Anything?
Yeah. No, there's a great movie coming about how in the darkest hour Churchill became Prime Minister of England in April 1940.
All
right. Well, good things happen, but not
all
always.
righty. All right. If you're sharpening your razor blades at home, but I tell you, the one great thing about David, he is brilliant. You don't have to agree or disagree with what he's saying, but lay it out there that just the basic math. A lot of money's coming in, but no matter who, as he points out in Trump and elsewhere, there's a lot more money under Democratic, Republican presidents going out. And the latest signs are we have done nothing to stop that.